3 ways for you to get into the stock market as a beginner. This is important because there's so much noise, there's so many different avenues that people would tell you, but I got 3 stellar ways that can get you in the game and get you to printing money. The number 1 way is through ETFs, which are exchange traded funds. Now, think about it like this. You go into the grocery store and you go on a snack aisle. You go in that snack aisle, there's rice cakes, there's oatmeal cakes, there's different variety of potato chips, there's oatmeal. All of this is on the snack aisle, right? Well, that is the ETF. It's a combination of companies that actually have similar products and services. Now, so let's say you like the technology. Well, you can get a technology ETF, XLK, right? Which might has Apple, Microsoft, Nvidia. It'll have a lot of your technology companies in there. And they're broken down by percentages. So if you put a certain amount of money in an ETF, let's say you put $1,000 into it, right? What'll happen is that ETF will say, well, we have Apple at 10%, it'll have Microsoft at 8%, it'll have Nvidia at 3%. Well, this is how your money is allocated inside of the fund, right? And that's amazing. Now, the one thing you got to watch out for when you buy ETFs is you want to look out for the expense ratio. The expense ratio is exactly what you're paying that fund to manage those collection of stocks for you. So you have another one like SCHD, which is a dividend ETF. So all the stocks inside of that was selected by that fund because they pay a great dividend. And so what happens is the people who run that fund are going to charge you expense ratio to be a part of that fund, and they're going to allocate the stocks the way they see fit. So the number 1 way for me to tell you about getting in the market would be ETFs. The number 2 way for me to tell you to get in the market is REITs. Now, this is you investing in real estate and then getting into the stock market. That's right, investing in real estate. Now, I'm not going to lie. The real estate investment trusts pay huge dividends, and we're going to talk about some of the ups and downs of that. So think about if you're in Atlanta and you go to Phipps Plaza or you go to Lenox Mall. Well, that's owned by a company called Simon Property Group. Simon Property Group is a company that pays dividends, but they own luxury malls, right? Another one would be like Tanja Outlets. So what they do is, you know, all those outlets they got, like in New Orleans, when you go to Baton Rouge, like there's a Tanja Outlets, right? So they have all the outlet stores. The thing about that is those companies pay rent to the real estate investment trust. Now, they get tax breaks for having that. And one of the things that they have to do is pay us 90% of all profit has to come to us as investors with real estate investment trust. So if you buying Simon Property Group or if you buying Tanja Outlets, guess what? All of that rent that they collecting, that profit, they got to break that down to us as investors. Another one would be public storage, U-Haul, right? That's right. These storages, they are actually real estate investment trusts. They are great cash cows for investors. The upside is the dividends are going to pour in for us. The downside to these are stock prices in these real estate investment trusts don't really move a lot. You're not going to get outstanding performance. You're not going to get market-beating performance. You're going to get sideways movement, but you're going to get a consistent dividend. I call these real estate investment trusts cash cows. Another one I like is Iron Mountain. Iron Mountain is a company, all they do is collect paper, right? So you go to these corporate buildings when companies got to shred their paper and that's Iron Mountain. You've seen the Iron Mountain truck all around and you didn't know it was them, but that's what they do. Now, the best way for you to get in the market is just buying the S&P 500. Right? So just buying the entire stock market, all 500 stocks, you can't beat it, man. It's the SPY or the VOO. This is going to allow you to buy the entire stock market, the best 500 companies in the market. You really can't lose with that. The market is up 76% of the time. It's a good way for you to play the game. I actually use it as my savings account. Now, for those who are a bit more riskier, I got something for you right here. What I would like you to do, if you truly want to get in the market and not take on a lot of the risk, you can simply go and look for the top 10 biggest companies in the market. That's your Apples, your Microsofts, your Googles, your Facebooks, your Berkshire Hathaways. Go look at the top 10 biggest companies on the market, and you can get you a position in those companies, right? And the reason why I say this is because when you look at the top 10 biggest companies in the market, they're going to be here for a long time, but also their products and services are what's going to be here for a long time. One of the things that I do not like is when people say this company ain't going nowhere for a while, so I'm going to invest in this company. Well, that don't kind of work with me. But in those top 10 companies, you have companies that have great products, great services, and great moats. Now, we're going to create a video about moats because it is imperative for you as an investor to find companies that have great moats. Listen, if a company ain't got a moat, y'all, we ain't get invested in it. So let's talk about a company like Apple, right? They have what? 1.5 billion users. Not only do they have 1.5 billion users, they also have products and services that their clients or consumers cannot live without, right? Let's talk about another company in the top 10, which is what? NVIDIA, right? Top 10 companies. Why? Well, that chip, as we navigate to the technology space, that chip will be used by everyone, right? This is why they're such a valuable company. Let's go a little bit further. Let's talk about Microsoft. Let's talk about Windows, right? What happens? It's the #1 computer in what? Corporate America. Another top 10 company. Let's talk about it. Meta, right? Has more active users than any other company in that digital advertising space. So understanding that type of power in those top 10 companies on the stock market will be essential for you, right? So I don't want you to just look at the company not going nowhere for a while. I don't want you to just look at, I've been using this company forever. Those are some of the worst ways to get in the market. As a matter of fact, we're going to make a video about that. Some of the biggest mistakes you can make as an investor in the market. So I want y'all to look at that. Let's do a little quick recap, right? #1, ETFs, exchange traded funds, right? A collection of companies that move and operate, have the same similar products and services. #2, we talked about what? Real estate investment trust. We talked about you getting in real estate. But the downside of that is what? The stock won't move a lot, but you'll get paid those dividends. But that's a great start for you as an investor. #3, just buying the entire stock market as a whole. The VOO or the SPY. The VOO is actually going to have a lower expense ratio because it's by Vanguard. And lastly, we talk about you just buying stock in the top 10 companies on the market. That's a great way for you to start in the game. But also, let me say something to you. Here's a cheat code. If you buy ETF, the ETF will also tell you the top holdings in that ETF. That can also be a cheat code for you. So if the ETF already did the homework for you and you find out what those top 10 companies are by going to something like etfdb.com, it'll show you the top 10 holdings and you can pick one of those companies to put in your portfolio. It's your boy, the Wall Street Trapper. Make sure you like and subscribe to this video and be ready for more videos to come. Salute.